The International Monetary Fund is the latest key institution to slash its growth forecast for Africa's most industrialized economy, which may have fallen into its second recession in as many years. It now expects the South African economy to expand by 0.7% in 2019, half of what it estimated in January, and similar to forecasts by the South African Reserve Bank and, of course, Bloomberg Economics. Well, let's get the perspective of an economic analyst in South Africa on this. Trinity Nkube joins us from Johannesburg. Good afternoon, Mr. Nkube. Thank you very much for joining us.
Good afternoon. Thank you for having me.
All right, so IMF cut South Africa's growth forecast for 2019 to 0.7% from 1.2%. Do you foresee the country going into a second recession in consecutive years?
Hopefully not. What we have been seeing is that IMF has stated the same factors why the economy is at where it is now, citing reforms and so forth. What's encouraging is that of late, we've started to see these SOEs being bailed out. Of course, conditionally, there's some conditions attached to the bailout. I do not foresee a dire, situation where we can have a recession. However, anything is possible. It depends on what happens in the next 3 months.
Now, the Reserve Bank last week cut its interest rates just to boost the economy. However, the Finance Minister, Tito Mboweni, signaled tax rates may have to climb to help bail out Eskom. What is your take on these? Some analysts have described it as a give and take thing. The central bank gives, the Finance Minister takes.
Well, economics is about trade-offs, and unfortunately, the finance minister is navigating a very tough environment. He came in to clean the mess that's been there for the past decade. So, yes, some taxes might need to be increased in order to fund some of these SOEs. What's encouraging for me as an economist is that some of these, bailouts are going to be conditional, pending on strategic and operational plans. So they're not just dishing out money to these SOEs. So what I'd like to see is a more prudent fiscal and financial plan, from the National Treasury and the Reserve Bank. So I would say, unfortunately, there are tough times ahead. The country just has to come together and work together, the private and public sector. But key to all of this is discipline across all sectors.
Okay. Now, Eskom will get an extra 59 billion rand, that's over 2 years. Would that solve Eskom's problems?
It won't solve their problems. There's quite a lot that needs to be sorted out when it comes to Eskom. We're looking at the throughput. We're looking at what they are focusing on. Eskom is a very strategic, entity as it is. So, unfortunately, there's no choice here but to actually bail it out. So this is just to fix the issues that are around Eskom at this moment, because Eskom also supports a lot of industries across South Africa. So it is something that needed to be done. In the long term, though, as I said in the past, what we'd like to see is, strategic and operational plans with the intervention of even independent bodies to come and sort out all the inefficiencies and ineffectiveness, around Eskom.
The Reserve Bank made it clear that its 25 basis points reduction, to the rates can only just have a significant impact on an economy that's forecast to expand just 0.7% this year. That's if it's complemented by other structural reforms. So what sort of structural reforms should President Ramaphosa and his team be looking at now, other than tax rates?
So there are a lot of structural reforms that are needed. One that springs to mind is competition and so forth, to open up, competition, to other players. This could push us to have an efficient public and private sector, as well as support to small to medium businesses. We'd like to see some support for small to medium businesses. There hasn't been any coherent policy across that. So we would like to see more of that happening, which will solve the job creation problem, because the private sector, as it is,
guess we're having a bad network there. In any case, thank you for talking to us, Trinity and Kube, giving us an update on some of the economic developments out there in South Africa. Let's do a quick crossover now to the Nigerian Stock Exchange for market update with my colleague, Temple Ashaju. Hello, Temple. Good afternoon. Well, yesterday we saw the markets reverse negative sentiment to close higher at 1.21%. At intraday today, it was still looking good. Has anything changed now, and what are the major drivers?
Well, smart investors rather are taking profits in the market, and so at midday the gains of some 0.5% that you saw is now beginning to trend lower to some 0.16%. That's what we have in the system, because again, if you look at quite a number of those companies that gained yesterday, it kind of deposits opportunities for some investors to take some profits today in the market. So the likes of Seplat, Nigerian Breweries, Zenith Bank, which is expecting to release its interim dividend, are some numbers that or companies rather, stocks that investors have been watching and quickly doing their rebalancing, portfolio rebalancing on. Seplat is about the only company right now moving the oil and gas indices upwards, because the oil and gas has actually lost some 0.48% or 48% year to date up until the numbers we saw yesterday. Given the gains we are seeing around Seplat right now, about 10% gains, putting that company at 525 naira, he puts that sector in a good light. Industrial goods segment, given the gains around WAPCO, is also putting the industrial goods segment of the market in green light. And of course, Zenith and a couple of others are putting the banking sector in the north position right now, Chimizu.
Anyway, Temple, let's just hope this positive sentiment continues for the rest of the week. Thank you for this.